Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. And to begin, I'd say I'm in my usual state of amazement at how the markets more or less led the UK politics to bow down. I mean, even the hint of a rollback of policies on which the government was formed brought in a significant volatility. Government bond yields dropped, GBP rallied, which led to other majors also strengthen some bit against the dollar. But there's something still brewing in the interest rate space. Now, Pankaj, I'd like you to share what's your take on the financial markets and what's brewing over there.
Good morning, everyone. Thanks a lot, Shikhar, for setting up the context. It seems that the pole position of financial market news is shifting to UK from US for time being. It's look like it will be a short term, but till 31st October, market will be looking at financial news from UK. Yesterday, Jeremy Hunt, the new chancellor, has reversed almost all the taxes increase done by the previous chancellor, Mr. Quadran. Now, this is what creating a volatility in overall global markets. Immediately after that announcement, GBP, the currency jumped almost by 2%, and UK 10-year yield dropped by 40 basis points. I don't know how Mr. Jeremy Hunt will fill the gap of a large fiscal holes and how they would be helping the market to consolidate on a stability side when the other financial chancellor feel that the fiscal deficit cannot be increased. But as of now, some comfort market is drawing with that Bank of England and finance chancellor or the new chancellor is working in tandem to improve the market, to basically provide more market stability. We're likely to see some political news also overtake economic news in the UK because lots of media and journalists claiming that Liz Truss won't be able to survive a medium or longer term as a UK Prime Minister. You'll be watching that. On these announcement of a Jeremy Hunt, the market, the oversold market overall got recovered. Euro has also seen a decent bounce, which is currently trading at 0.9830 against the dollar. But one currency which is continuously depreciating even after the statements from finance minister of that country, and that currency is Japanese yen. We are almost hovering now above 149 and 150 looks like in a side. We saw a decent bounce in global equities. Technology stocks, Nasdaq was up by 3.5%, where the other indices were up by 2.5%. Now, if we come to the India, let's look at the India. RBI publication got released yesterday, bulletin, monthly bulletin. And that shows that RBI is receiving the short-term premium. The RBI has created a short-term dollar forward position in 1 month, and overall, the cumulative amount, or basically the amount which RBI used as an intervention in the month of August, is they have sold around $4 billion in spot intervention and created an additional sort of a 1.8 billion forwards. But important to note that they are creating a short-term short forward position, and which is helping forward premiums to stay lower. Probably this is signaling that RBI wants to put it across that the market should reflect basically the interest rate differential between the two countries. We'll be watching that in a way. Short-term liquidity is getting tighter in Indian finance system. 3-month CPs, which was around before this rate cycle start happening, it was around 350, 360. Now, which is 360 of a good companies. Now it has reached to 7 quarter, a significant amount of a 4% jump in a short-term interest rates, and which indicates that all is not good in Indian debt market as well. Indian debt market has got almost flattened in a 10-year. 10-year GSEC is around dealing around 740, where the 1-year treasury bill is also dealing around 7%. So it's a very flat curve which we are seeing in the India as well. Yesterday, we have seen a continuous offer from RBI again. They were intervening around 80 to 40, and that gives a hint that RBI, as of now, protecting 80 to 40. We would see some kind of a appreciative move in rupee today. The likely range is going to be around 15 to 35 in market. Yeah, that's all from me today. Thanks a lot.
Okay, wonderful, Pankaj. That was quite interesting. And yes, folks, the short-term credit have gotten quite costlier, and the curves have continued to flatten. So that's some kind of a concerning space for the Indian debt markets. But it can be seen that RBI, our central bank, is here to ensure that the market reflects the interest rate differential among the countries and the currencies. So that's that on the currency front. But on the international currency side, we are continuously seeing Japanese yen continue to weaken, even though there are statements from the finance ministry and sometimes intervention by the central bank. All in all, that's it for today, folks. We'll be joining again tomorrow with another round of fresh updates. That's it for today. Thank you so much for listening.